Welcome to the Seattle Investors Club podcast with Julie Clark and Joe Bauer, where we share the nuts and bolts of real estate investing from our 20-plus years in the industry. Sit back, relax, listen, and immediately take action. Are you ready? Here we go.
Welcome to the Nuts and Bolts of Real Estate Investing podcast. My name is Joe Bauer, and I'm here with my co-host, Julie Clark. Julie, how you doing today?
You know what, Joe? I am actually calm, collected, and happy to be back on a schedule, or whatever a schedule can look like these days, which means school has started.
Ooh.
And so my kids, my girls are forced to engage at something by 8:45 in the morning that takes them till about 2:30 in the afternoon, which is, I'm thankful that we're back in school, right? A little bit of normality brought to our life. So what's up with you? Speaking of the opposite.
Oh, I feel like craziness is back in town for me, meaning that we're jumping around from place to place. We spent the last week in Cortez, Colorado, which had I swear they don't have a solid cell phone connection in that town. It's there's a ton of people there. There's the national park, Mesa Verde. And I couldn't upload a video. I could not figure out how to upload a video there. Unfortunately, the mountain biking is world class. So we hung out there and just dealt with it for a little while. But now we're in Durango, Colorado. Cool. And it seems like it's pretty cool here. We just went to a little coffee shop, and they were nice people, and we'll see what happens.
Well, I did buy my Epic local pass for the season upcoming, which is Vail, which is one of the resorts on there. I think it might be Telluride. I'm not sure, but
it might be. Yeah, maybe.
Yeah, I was thinking, man, maybe we should, because we might not be able to get to Whistler. Maybe we should hit Colorado, right?
Heck yeah.
What's your guys' plan right now? What are you guys up to? Are you national parking it, or are you now what are you guys up to? What's the
Yes, so we are just kind of mountain biking around the good weather right now. And we came from Arizona into Colorado, and we're kind of hanging out in Colorado for the next few weeks, and then going into southern Utah, and basically just taking advantage of this weather that we have this time of year in this part of the country, which is 70s and 80s still. And hitting up all these nice mountain bike places because, like you said, the kids are back in school, so there's less people out around here, and it's easier to find campsites, and just taking advantage of that.
Are you guys going to are you going to snowboard this year?
Heck yeah. We got the whole month in Steamboat, Colorado at the KOA. We booked a whole month already.
Jeez.
Yeah.
Life is good. Life is good. Well, something interesting. We have a very special topic today that is meant to be an informative topic for all our real estate investor friends and our real estate investing community today. So let me introduce our friend and longtime consultant on all things real estate 1031 exchange and real estate tax is Mr. Bill Exeter from Exeter 1031. What's up, Bill?
How are you doing? We're having all sorts of fun. Don't we live in crazy times?
Crazy times. Mm-hmm. It's interesting, though. It feels like we've all settled in a bit to it, right? I don't know. I actually felt those fires. That was brutal. All the smoke and everything like that was almost worse than the coronavirus there for a few weeks as far as cramping the lifestyle. But we have had our rain and back okay up here in the Seattle area. Happy to say.
Did that kind of wash out all the smoke from the fires, or do you still have smoke up there?
It feels like it washed it out. I haven't checked the index breathing level or whatever, but it does feel like we're close to back to normal and so forth like that.
I think you guys had probably one of the worst indexes for about a week or two there than anybody else had. I think everything blew up your way.
Yes, it did blow up our way. But we're glad to be through it, I guess, and hope everybody is safe. And, what a terrible, terrible thing that was for all our friends in California and Pacific Northwest here and everywhere else around the world where all those crazy fires are. So let's transition into it today. I'm trying to think as we're talking, like, how am I going to transition into our topic? Had one, lost it. So I'm just going to jump right in today. Today, what we're going to talk about with Bill today, guys, is the potential tax proposals that will be affecting real estate investors if there is a Democratic nomination. And we're not meaning to say today that we're debating politics. All we're doing here today is just talking about how that would impact real estate investors, and not meant to be a political discussion, to each their own. But I think it's just important that we all know what is being discussed, so therefore we can plan or be aware, and to each their own, and choose, however they do whatever they do politically. That's not what we're talking about today. We're just talking about information. And we've invited Bill on because he's the expert on 1031 exchanges, which is up potentially on the chopping block after the election, and something we all need to be aware of. So let's jump into it. What do you say? So Bill, let's kick it off by maybe just kind of talking about what is being discussed, so people are informed of the discussion that's happening surrounding real estate investing and real estate tax strategies that we've enjoyed for the last I'm sure you can tell us how long, that have helped us keep our wealth after we've earned it, and transfer our wealth maybe to our families, and what we might need to know about and just be thinking about and aware of today.
Sure, absolutely. And I'm really glad and like the way you led off there too. This is not a political issue. It's obviously being proposed by candidate Biden, but it's really a tax issue that everyone needs to be aware of. And I can back up, 1031 exchanges actually will be 100 years old next year. So 2021 will be the 100th year anniversary of the 1031 exchange. And it's obviously gone through a lot of changes in the last 100 years, especially after the 1986 Tax Act and the 1990 regulations. But every 4 to 5 years, there's been some kind of a proposed change or threat or elimination of 1031 exchanges. And people just need to be aware of what's coming and what's being proposed, so they know they can go out and talk to people they know, and let them know what a horrible idea it is, not just for the real estate community, but for the entire economy. It really affects everybody. They just don't realize it. And so the proposal is to either eliminate or reduce 1031 exchanges, but it also includes other parts of the tax code that would affect real estate as well. One of them is the step up in cost basis, and that's huge. So eliminating 1031 exchanges is huge. Eliminating the cost or the step up in cost basis is huge. And
bonus depreciation, elimination of bonus depreciation.
Yep, exactly. That's also on the chopping block. And a lot of people don't realize how huge that is. You mentioned that you work all your life, you work hard, you put in a ton of hours, you work with real estate investors and tenants, et cetera, and you build your little portfolio, and it'd be nice to pass that on to your kids and have your kids inherit the property and not have to worry about paying capital gain taxes. But if they eliminate the step up in cost basis, now your kids have a capital gain tax they quote unquote inherit, and they're going to have to pay tax on if they ever sell the property. So it's kind of a hidden death tax, if you will, that you pass it on, and you're kind of letting your kids take the burden there. It's just, all of those are going to be a huge, huge impact to the current generation, the current real estate market, the current economy, but also future generations.
And to be fair, let's talk on the other side of the coin again, because we're not at all trying to be political here. We're a real estate investing podcast. We're talking to our friends here, mostly our audience. I would assume are real estate investors or or aiming to grow their portfolio of real estate investment. So this is just a discussion, a normal topic we would want to talk about as a group. So what this is the Democratic plan, Joe Biden's plan, is a 10-year. I'm just going to read an article from the National Real Estate Investor, a little bit out of there. It's a 10-year, $775 billion plan to fund universal child care and in-home elder care that would be paid for by taxing real estate investors. It's about easing the squeeze on working families who are raising their kids and caring for their older loved ones at home at the same time. And that is, I believe, what the intent of it is to cover that type of, to assist in that type of arena, I guess I'll say, for lack of a better word. I don't know if you have anything to add to that.
Sure. And you're absolutely right. It's, there's always good causes behind it. Folks want to take care of people, and they propose all sorts of programs. And then 1031 exchanges often becomes what they call a pay for. Let's eliminate Section 1031 from the tax code and then look at all of this capital gain revenue we're going to collect. And that'll help pay for all these programs. But in reality, that's not what happens. And that's where the disconnect is that people need to understand that doesn't happen.
Right.
And it's the best way to look at it is you look at it from an investor's perspective. And I think, like you said, most people on the podcast are probably investors or real estate connected somehow. And, think about your portfolio. And when you do a 1031 exchange, you're repositioning your portfolio to accomplish something, whatever your goals and objectives are. And you do that because you don't get hit with taxes. You can defer it to the 1031 exchange. If all of the sudden 1031 exchanges went away, over the years we've done surveys and asked investors, what would you do if that happened? And almost every time, at least 60%, and in years where the tax rate was really high, almost 80% would respond and say, well, we just wouldn't sell. And if you don't sell, then there's 2 transactions at least that go away. So 2 title companies, 2 escrow companies, 2 lenders, 2 appraisers, an exchange company, CPAs, attorneys, appraisers, all of those people, they don't get any revenue and they don't pay taxes. So it ends up being a revenue loser. And then, of course, with all of that economic activity that grinds to a halt, it affects the economy, and the economy grinds to a halt. So that's the devastating factors. It really reduces tax revenue when you actually look at reality, and then it takes a huge hit to the economy.
And then, another thing I've read in some of these articles, they're saying, in short, like-kind exchanges create a more dynamic real estate marketplace, ensuring that properties do not languish or permanently become underutilized or underinvested. There's just such a trickle-down effect from, it's almost like people don't understand, exactly how it all trickles down, and how it would be so impactful to, again, we want to, I agree, there's got to be a way to help fund people who are, taking care of their family and things like that, right? But just let's say off the top also that this, the 1031 elimination would be for investors who make over $400,000 a year, right?
Right. Yep.
And so I think that it might still apply in some form potentially for those that make less than that. Is that an accurate statement?
Yeah, but based on the little information that we have on the plan, that sounds correct. The wild card here that I don't think is well defined, but the way I interpret that is that usually your income is your adjusted gross income. That's normally how they would define it, is the adjusted gross income off your tax return. Well, if you sell real estate and you have a nice capital gain and you also have a nice salary and interest and dividends and capital gains, it's not uncommon for that particular year when you sell real estate to push you right into that 400,000 and plus bracket if you had to pay tax. So it affects more people than what they realize, because folks see the 400,000 number and they say, oh, my salary is less than that. Yeah, but if you sell real estate and you add your gain and depreciation recapture and all of that stuff into the equation, it's going to affect more people than they realize.
Right. I mean, so just to summarize up what they're talking about again, it's the elimination or a phase out of the Section 1031 like-kind exchanges, right, which is where investors who sell income-producing property can reinvest it in other income-producing property at equal or greater cost, without triggering a tax on the profit, basically by kicking the can down the road, right? The original basis rolling forward. And they're also talking about increasing the top tax rate, ordinary tax rate, to 39.6% and taxing long-term capital gains at ordinary income rates for individuals with incomes over $1 million. That's another thing they're talking about doing.
And that kind of has the same impact on the economy, where if you're an investor, and even though you may make that much money, so you're a high net worth individual or a high compensated individual, why would you take the risk and why would you make an investment if you're going to pay basically 40% federal and then whatever your state rate is? So it decentivizes investors to making investments when you start to raise taxes to those levels. And it's brutal. There's actually 2 studies that were done back in the last threat to 1031 exchanges. There's about 16 or 18 industry trade groups that got together, and they hired Ernst & Young, which is one of the big 4 CPA firms, and asked them, if 1031 exchanges would just completely be erased, what would happen? And they came back, and one of the things they had found through their studies were that if 1031 exchanges went away, GDP, which is kind of a measure of the United States economic activity, would drop by 0.8%. Well, at the time, GDP was about 1.9%, if I remember correctly. So that's about a 45% drop in the economy just by eliminating 1031 exchanges. And there was a second study by Ling and Petrova. And one of the things they pointed out, they kind of confirmed all of the same information, but they also found that most investors don't keep exchanging until they pass on. Ultimately, those people who do 1031 exchanges at some point down the road, generally when they're retired or much later in their lifespan, they end up selling. So 88% of that deferred gain ultimately ends up generating tax. So it's a huge
wherever
number.
You found that would be an interesting thing. If you find that somewhere, wherever you saw that, send it to me. That's interesting.
Sure, absolutely. I can send you both studies. It's just huge. So really the 1031 allows you to keep deferring the tax over your lifetime, building your wealth and building your real estate portfolio faster, higher, larger, et cetera. And then at some point you cash out and pay the tax. So you actually end up paying more taxes down the road when you're ready to. And so it gives you kind of the control over the timing. But ultimately you pay 88% of the people out there pay the tax. And the other thing they fail to mention is but almost every transaction that you do today, there's always a little bit of tax that gets triggered because of closing costs that aren't deductible or what have you. So the fact that the 1031 encourages all this transaction activity means they're paying a little bit of taxes today that they wouldn't have paid if they couldn't do a 1031 exchange, and it stimulates the economy.
Right. I mean, it also, encourages investment in affordable housing and other properties. And, right there, that generates state and local tax revenue, new jobs through, improvements to the properties once they're purchased, What else is this saying? Exchanges reduce the need for outside financing, leading to less leverage on debt on U.S. real estate. It allows.
You mentioned local, and I forgot to bring that up, but that's an excellent point. Cities, counties, states rely quite a bit on transaction fees. So whether it be documentary transfer taxes, recording fees, et cetera. And so the 1031 exchange means every single time you do an exchange, there's at least one sale and one purchase. So the city, county, or state is getting at least two different transaction fees, whatever that means to your particular state. And if 1031s go away, all those government agencies are going to have a huge reduction of local tax revenue.
Yeah, I don't understand how, I get that they're funding a federal programs with this, but what's the discussion on the impact on the local states? That's got to be, like we're talking about here, very impactful as well, right?
It's huge. Usually the issue that we've found over the years is there's somebody in the back office who, thinks about this and thinks, well, wow, if I just erase Section 1031, we're going to collect all this tax revenue. And they don't really understand how the real estate market works. Frankly, in a lot of cases, they're really young interns or folks that are working at Capitol Hill. You get some great experience up there. So you get a lot of 20-somethings that's probably their first major job or opportunity. And they just, from an academic perspective, it makes sense. Eliminate Section 1031, you get all this tax revenue. But when you drill down and you look at the impact at both city levels all the way to federal levels, there's a lot of government budgets that are going to get hit.
Right.
Hey guys, it's Julie here with a quick break from the show to discuss an opportunity some of you may have interest in, which is to work more closely with me. On almost a daily basis, I get calls from investors and brokers, both new and experienced, asking me for guidance or advice. I love helping you guys out, and it keeps me on my toes too. So with that said, I wanted to let you know that I have a private broker coaching community called the VIP Education Community. And the best part is that it's 100% free. That's right, it's free to join. So whether you're a traditional broker or a broker investor, my VIP education community offers personalized one-on-one coaching from not just me, but also from my experienced broker friends with expertise in all disciplines of real estate and real estate investing. We'll teach and share our modern marketing strategies, our tech and lead generation resources, plus teach you how to identify or offer up opportunities for yourself or for your clients using techniques such as seller financing, lease options, land entitlement deals, BRRRR investing, flipping, multifamily or commercial coaching, whatever you like. We've got it all covered for you. The future of real estate is changing fast, and to stay in the game, it's time to learn about all the options you can offer your buyer and seller clients, as well as, if you want, learn how to use those skills to grow your own real estate portfolio. If you'd like more details about joining my VIP education community, reach out to me at julie@seattleinvestorsclub.com or text me at 206-910-2985 or just send me a Facebook message. My new favorite phrase is community equals confidence. So let's navigate the future of real estate together. Now, back to the show.
Right. Are you noticed any uptick in, I was reading one article or some real estate consultant thing that said you might want to start thinking about selling your properties, if you're going to do that and doing your exchanges by the end of this year, because there's a possibility, whether they pass it, a year from now or what, that it could be retroactive. Have you heard anything about that?
We've certainly seen an increase in activity. I think part of it is probably related to this, that they want to make sure they get their exchange in before it goes away. I think a bigger part of it is a lot of people got hung up and really locked down during COVID-19 and couldn't do things. And so there's kind of pent up demand, and now they're, coming out of their homes and able to do stuff. So I think we're seeing two things there. We also went into COVID-19 with one of the, if not the strongest economies we've ever had. So it's when you go into a recession, a lot of time the economy is kind of starting to weaken and it just kind of slowly goes into a recession. In this case, the economy was really strong. It was firing on all cylinders, and all of a sudden this disease hit and just shut everybody down. So the economic engine was still there, except it got kind of inhibited. So I think now we're seeing it's starting to, ramp up again. And, under the government's definition, the recession technically only lasted 2 months. So it shows how quick this hit and how quick we're coming back out of it. We still have a long way to go. But so I think it's a lot of that.
I asked one of my best friends works at Lee and Associates, which is a commercial real, one of the largest in, commercial real estate brokerage firms. And I asked her, "Are you seeing any property owners talking? Are they talking about this, 1031 issue? And are they, anybody have you ramped up?" And she said, "It's definitely a thought. It's like people are talking about it." But that the actual motivation to sell this year is more driven right now by the vacancies and maybe deferred maintenance on properties. Mm-hmm. So related more to the economic impacts of the pandemic, I think is.
I would agree with that. I think that's right on point. And actually, while you're talking there, it triggered a thought. I think probably the next, I don't know if you want to say trend or wave, will be investors trying to adjust their portfolio based on what happened during COVID-19. Obviously, the retail market is going to get hit hard. Commercial office will probably have some impact. And so a lot of people are going to be needing to do some type of repurposing or transitioning because of that. And the 1031 exchange would allow them to do that. So they could sell and reposition however they need to.
Right.
So
without taking, maybe they buy something else and they're able to recoup their losses, right, of whatever's going on that they have to get out of.
Absolutely. Yeah. I mean, eliminating 1031s today coming out of the COVID-19 situation would be a disaster. I mean, we need to get past this, get the real estate market back on track, get the economy back on track before we give it another 1-2 punch.
Exactly. Did they start proposing this before the pandemic started, or is this something that came up? I mean, obviously, right?
Yeah, it's something that he had actually included it in his. I don't know if it was a formal proposal, but it was certainly contemplated in written format back in January, February. So before COVID-19 really had an impact on us. So it was certainly there beforehand. He didn't really announce it until really after the fact. So I think the mention of it and the discussions started happening after COVID-19 had kind of passed and gone over the hump.
Yeah, exactly. Interesting stuff. So again, what we're talking about is this is impacting the 1031 for anybody that's going to have what we said, the adjusted gross income of $400,000 or more. But like Bill's pointing out, in the years that you would have a transaction, that would be you potentially, right? Even if you don't make that every year. Talking about taxing long-term capital gains at ordinary income tax rates for individuals that with income over $1 million a year. And I guess they consider that to be protecting the smaller investor by putting that $1 million threshold there. There is the elimination up on the block here, the elimination of the bonus depreciation, which has been a huge topic and many podcasts done on that topic here in our inner circle of all our different real estate investment clubs and all our friends that have their podcasts and that sort of thing. Let's see what else is on here. The change of the inheritance tax provisions and reducing or limiting the ability of investors to use real estate losses to reduce their taxable income, right? And that is, again, at the $400,000 threshold there for your income.
And all of those kind of circle back and kind of give the real estate investor the punch to the stomach, if you will.
Right. So that last one is basically changing how you get to use passive active loss and depreciation. So basically everything, guys, is on the table, it feels like, right?
Absolutely. And a lot of the articles you see out there, they talk about individuals and the family, et cetera, but they don't seem to mention small business. And small business is really the economic engine behind the economy and hiring people, et cetera. And it's not unusual for a small business to have income that's over $1 million or over 400,000, whichever threshold you're looking at. And small businesses are a huge benefactor to 1031 exchanges. Let's say you start a business, you got 5 or 10 employees, and you're going great, and the business is growing, and you run out of space. With today's 1031 exchange, you could sell that, whatever it is, a factory, a retail space, office. You don't get hit with any taxes. You can trade up and double your space or triple your space to keep building your business. And that keeps the business growing and allows you to hire more people. And that's the key, is hiring more people for the economy. Without the 1031, they get killed with federal and state and local taxes. And in some cases, the small businesses can't grow, then they can't buy bigger property because they get killed.
Right. And smaller investors can get a leg up, right, by using a 1031 if they're, cash strapped, for example, using a 1031 to trade up, is another tool for people that, the like-kind exchanges play an important role for in supporting our economy too. So what do we think we should, if somebody's, basically, if you're out there, I think all this also, won't go into it. There's also a tie to rent control and all that sort of stuff as part of the overall discussion, I think, that ties into this. Not prepared to go deep dive on anything like that today, but, something to talk about. And for those of you, out there that are, boy, there's an exodus already, like I was saying, out of California. Personally, I'm a real estate broker here locally. I do traditional brokerage activities as well as my own investing activities. That's both commercial and residential for myself. But I had a Silicon Valley, we'll just say like a venture capitalist type up here this weekend, touring homes, because, as he says, there's a mass exodus out of Silicon Valley directly related to the taxing issues they're having there in California. And what was interesting is where they're moving, he said, was Incline Village, because I think they can drive in. They're moving to Austin, just as a heads up for you real estate investors on where you might see an uptick in values because of migration into these areas. He said they're moving to Incline Village, which is drivable, I think, to Silicon Valley. They're moving to the Seattle area. They're moving to Austin, Texas. And interestingly enough, he said the Miami area was one of the areas that they're moving to. And so just heads up for you guys that are out-of-state investors, those might be great areas to keep your properties in, and they're all looking to invest their money, right, and get their assets out of California, I think. But pretty interesting stuff there. If you're looking,
California has lost their mind in a lot of cases. I'm born and raised in California, and we're headquartered here in California, so I can say that.
Right. And so if you're an investor listening to this, I know, if you're a commercial real estate investor, I'm sure you've been paying close attention, or a multifamily investor. If you haven't, and you're just been a long-term investor, and you've, been building your portfolio of properties over the years, this is something you need to do a check-in on, right? As Bill's talking about, and decide if, if you're being impacted by everything that's going on in our economy due to the pandemic, with, if you own buildings that are having vacancy issues or deferred maintenance type of issues, maybe, like you said, repositioning yourself is something that you should be prepared to think about, because those things don't happen overnight, right? The hardest part about a 1031 exchange is finding the replacement property. right? I mean, so I wonder, is there like, I know that, lots of commercial properties are traded off market, right? That's very, very common in commercial and even in bigger multifamily, but sure would be an interesting club to start in the sense of, a forum for 1031 somehow, assisting each other. I know that happens in the commercial real estate brokerage community, but, investor to investor type stuff is something interesting there. But anything you want to add to this, Bill? If this sounds like something that anybody listening needs to talk about further or consider further, highly recommend that you get in contact with Bill Exeter here, who's been, how long have you been doing this, Bill? Long time.
Yeah, this is my 36th year doing 1031 exchanges, so a long time.
Right. And of course, this impacts his business tremendously. What do you think would happen to you?
Well, we're one of the few QIs, qualified intermediaries, that has other operations. So we also own a trust company that does like self-directed IRAs and other products, custody services and things like that. So we'd be okay. It would certainly be a huge impact to our revenue, but we'd survive a lot. Most of the qualified intermediaries do just 1031 exchanges, so they'd be out of business or get hit so hard that they'd have to reconsider whether they want to be in business.
Or they pivot to whatever the service is that's some sort of related thing to what might happen. But yeah, it'll be interesting. I guess it does sound like, more so on the forefront of people's mind is definitely like, oh my God, I'm being impacted by vacancies and, deferred maintenance, which is hard to pay for when you have vacancies and stuff like that. So, again, just a topic we all want to put out in front of you guys. I definitely encourage you to do your own study and your own, investigation into all this. Now, with all this said, Bill, we're just bringing it up as a topic for people to pay attention to. The reality is to get something like this passed would require like a Democratic sweep of Congress as well, almost, wouldn't it?
Yeah, in this case, it's proposed by candidate Biden. So if he gets elected, then he could propose the legislation, and it would again have to be passed by Congress. So it would still go through a process. It'd have to be submitted as a bill, and then the bill would have to get discussed and voted on, et cetera, and then go back to the president and signed and enacted into law. So at this point, obviously, it's very early on because the election hasn't even happened yet. So first stage is November election. We see what happens, and then after that, we go from there. If Biden gets elected and he does propose this, I would say even before this, if anybody who's listening has any contacts in Congress or any type of political connections, this is not a Republican versus a Democratic debate. This is a real estate investor issue. And reach out to anybody to let them know this is going to be devastating to the real estate market and the entire economy. It affects everybody. It's not a political issue. It's an investor tax issue.
Right. Okay, guys. Well, that's it today. And we appreciate you listening. And hopefully this just gives you something to think about so you can plan accordingly. If to each their own. That's the point of this podcast today. To each their own. Information is just information. And the goal here at Seattle Investors Club and for the nuts and bolts of real estate investing with Joe and I here is just simply to share with you information that we think is be helpful for you to make your own decisions and move forward with your investing and your life the way you like. So thank you for listening. And if anybody wants to talk about it further, just let us know. Any other topics you want us to cover, let us know. But we appreciate you joining us today. And as Bill, we always appreciate you. How'd the Big Badass Virtual Real Estate Expo go? Did you participate? I think you did in that, right?
We did, yeah. We had a trade show booth, if you can call it a trade show booth, online, and it was fascinating. It went really well. I think they had a great platform for the trade show. It's hard for people to imagine what a trade show looks like when it's online, but I think they did a good job. We made a lot of good connections and a lot of good educational programs out there. It was awesome.
Did you feel that you were getting, shout out to Tarl and Grace Yarber, our friends that host the Pacific Northwest Big Badass Virtual Real Estate Expo that just occurred. Congratulations to them pulling that off in a time of craziness like this. Did you have people stopping by? Was it, just curious that half the people stopped by, or as compared to last year, or how'd that go?
I think the turnout was probably better than last year in terms of total numbers, from what I could tell. It's certainly online too, so they got people who could attend where they maybe couldn't travel in the past, or even this year. COVID. So I think the turnout was really good.
Did you listen in on any of the panels, or were you busy at your booth?
We were kind of just in and out in our booth, answering questions and things like that. So we get a lot of technical questions when we have that type of an activity or trade show.
Yeah.
I thought we got a lot of good questions, a lot of good inquiries and strategies, and kind of bouncing ideas off of us. So I thought it was good, especially they did a great job for their first virtual. That's a tough transition to make.
Yeah, really. Yeah. Congratulations to them on that. So, okay, good stuff. Bill, how can people reach you if they want to review their situation with you? And I know
they can call, email, go through the website, whatever they prefer. So my phone number here is area code 619-239-3091. So that's 619-239-3091. My email address is wexeter@exeterco.com. And the website is exeterco.com, exeterco.com.
Awesome. Something cool I ran across today that I'll share with you guys as a little tidbit is there is, I think it's nationalrealestateinvestor.com, I think is the site. But they every day publish, I'm trying to look for my notes here. They publish a list of like the 10 most important articles that you should read today as a real estate investor. And whether you're, not in the big leagues yet or not, educating yourself about the real estate market in general and what's going on in the bigger pools, if you want to call it that, is a really great idea to help you understand, because real estate tax and getting taxed on our real estate profits and so forth affects everybody. It's not just what level of investor that you are, right? And so I found that as a cool find, that it's what they felt were the 10 most important articles to read today from nationalrealestateinvestor.com. So just putting that out there for you guys. Or 13 most, it's kind of commercial real estate industry stuff, but if you're interested in pursuing that and growing that for your portfolio, get on that and listen. But other than that, Joseph, where can everybody find the details of today's podcast?
Yeah, everybody can get to the show notes by going to seattleinvestorsclub.com/126. And we've got Bill's contact information and everything we've talked about today on that link. And if you guys wouldn't mind, we'd love for you to review our podcast. Every 5-star review that we get helps us to boost our reach to more people out in the real estate world. So that would be much appreciated.
And one other thing I'll mention and remind you guys is that every single Thursday Pacific time, we have a weekly meetup that we do from 11:30 a.m. to 12:30 p.m. You can find the access to that meetup every week on meetup.com and search for Seattle Investors Club. That's a great place to stay connected with us so we can communicate with you about all the things and the information we want to share with you guys. But Bill does join us when he can on Thursdays. And if you have questions, it's a good place to come. It's a free open forum. You get to unmic yourself, ask any question you want about, whether that's, anything investing, single family, multifamily, commercial real estate, tax stuff, mortgage stuff, property management stuff, eviction stuff, anything you want to talk about. It's a place to bring your questions and to contribute, more so to contribute to the conversations. It's really fun to, uplift each other and support each other, because, my favorite saying is collaboration equals confidence. And when you know that you have a group of people that you can rely on, that you can ask your questions to. Anything goes. Sometimes people don't want to ask their designated broker or somebody like that. They want to come to more, comfortable place, where nobody's scrutinizing them to have those questions answered. That'd be the place to be. Again, go to meetup.com and look for Seattle Investors Club and grab the link every Thursday morning. And we start 11:30 a.m. Pacific time for 1 hour. It's fun. Bring your jokes, bring your deals, bring all you want. So thanks again for listening, and we'll catch you next time. Over and out.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.